The Turkish lira has been one of the world's most volatile currencies in recent months, and that's taken a toll on the economy by slowing growth and pushing up prices. Now the government's doubling down on reforms it says will get businesses going.
The
financial sector is our first priority when it comes to reform. One of the main priorities is to maintain the banking sector's strong infrastructure and continue to finance and supply the real economy.
To do that, the government's pumping $5 billion into state-owned lenders and raising capital levels for private banks. It's launching two funds to bring down the proportion of bad loans from the current 4.2% of total lending. And it's beefing up pension schemes to boost personal savings to 20% of GDP. Albayrak says businesses will be able to use these funds for expansion instead of relying on foreign loans. The government wants to drive growth in jobs and exports, and to do that, it's focusing on 7 industries, including tourism, pharmaceuticals, and the auto sector. And the Finance Minister plans to be back at the podium at least half a dozen times through the rest of this year to announce reforms for each of those industries. Ankara plans to improve infrastructure that connects farms and factories to markets, and it will raise spending on higher education so companies can employ more skilled workers. Albayrak says the spending will be offset by higher government revenues.
I want to state very clearly that budgetary discipline is at the top of our fundamental policies.
And that could mean a crackdown on people and businesses that don't pay their taxes. Mobin Nasir, TRT World, Istanbul.
And for more on this now, Dogan Yilmaz joins me here in the studio. He was a director at one of Turkey's biggest banks, Akbank, and is currently Director for Business Development at Vintage Bullion DMCC. Welcome back to Money Talks, Dogan.
Hello.
As someone with a lot of experience in the banking sector, explain to us how this injection of capital to the state banks can actually help drive their growth.
Okay. First of all, I would like to say that the banking sector, the financial sector, does not face the structural issues. It's more cyclical issues that like non-performing loans rising in the banking sector, and that is driven by 2 sectors, the real estate, and the other one is the energy sector. This could happen to any other economy, but to solve this problem, the government they press the buttons in the right buttons actually, and they are just putting all these bad apples or bad assets into a fund, and just allowing the banks to just breathe. And the state banks, and they are just injecting more capital actually, and giving the room to inject more liquidity into the banking sector or the real economy, which is positive from the standpoint. But when you look at the overall, it feels like fill in the blanks. When you look at the overall reaction of the market, it's flat. The Turkish lira and dollar didn't change much, and when you look at the stock exchange, it just fell a little bit today.
Yes.
So everybody is looking into what's going to happen and how this fund is going to work actually, where the liquidity is going to be coming, to the system.
And we haven't seen a package like this, of this size, in 18 years. The plan that was announced back in 2001 was
Yes.
widely regarded as a success. It was seen as a measure that really helped Turkey's banks. Do you expect that this latest package announced by the Finance Minister will have a similar effect?
Well, like I said, we have to see the overall how the fund is going to work, whether there will be a government, support to the fund, or the foreign investors will be coming into the fund and providing liquidity. So for the banks at the moment, yes, this fund is going to take all the bad assets into the fund, and how the liquidity into this fund is going to be worked, that we have to see. That is the most important point. So we have to just see the, overall how this is going to work out.
Okay.
And then we have to, analyze the results.
Yes.
But overall, I think the Finance Minister, Mr. Albayrak, just pointed out the, 4 pillars of the problems in the Turkish economy and, provided some solutions. But overall, we have to see how this is going to all play out in coming days.
We also know that Turkey's economy has faced a number of headwinds, including instability in the lira, high inflation, which is coming down, as we've seen in the latest numbers. But how do you expect this package, which is aimed at the financial sector, how could that go on to boost the wider economic growth?
Well, when you look at the financial sector and the banks in the Turkish economy, it is the engine of the, the markets. And since the capital markets overall did not really grow or just to fruitfully materialize in Turkey, so the banks are very important for the just providing liquidity and the credit to the system. So a good and healthy financial sector is very important in Turkey. And looking at this and providing liquidity and providing some relief to the banking system is very important, and it will just definitely will benefit for the Turkish economy.
Okay, as you say, the results remain to be seen, but Dogan Yilmaz, thank you again for coming into the studio tonight.
Thank you.